Yeah, of course.
Okay, we're live.
Hi, welcome to the FxScouts live stream. I'm Madison, and as always, I'm joined by Chris. How's it going, Chris?
Yeah, not bad, Alison, not bad. I apologise for the lateness. We actually thought we were live 10 minutes ago. We've been talking for the last 10 minutes. Turns out I never hit the go live button, so I can only apologise for the lateness, and I hope I hope you're still listening.
Yeah, waiting. Well, today we're going to be talking about what happened in Q4 of 2025, and we're also going to be talking about what we expect to happen in Q1 of 2026. We're already halfway through January, of course, so there have been a few signs. But today we are very happy to be joined by Aaron Hill. He's the Chief Market Analyst at FB Markets. Hey, Aaron, how's it going?
Yes, going very well. Thank you very much for having me again.
Absolute
Yeah, no, of
pleasure.
course. Of course, it's a real pleasure to have you on, Aaron. As we were saying, it's been a year since we had you on the podcast, and since then, 2025 was very tumultuous. And I just wanted to get before we jump into the specifics of Q4, your thoughts on how the big takeaways from the market moves, I guess, in 2025. I know a lot of traders have been saying that it's been a really bad year to be a trader because the volatility has been driven by geopolitics and by Trump's Truth Social account rather than anything predictable.
Yeah, trading geopolitics and trading off of social media posts is inherently a difficult thing to do anyway, and I admire anyone that can profit from that on a consistent basis. But yeah, for me, it's not something I would ever attempt in that sense. It always has to be based on a combination of a macro theme and a technical setup. That's how I primarily trade, macro and tech. Now, in terms of 2025, there was so much like the past couple of weeks. It's been mind-blowing how things have changed. I mean, April, we had the Liberation Day tariffs. That was just insane. Then Trump backed out, Trump went back in, Trump backed out. I really can't keep up with it. And I think the market has realized now he does back out. I mean, he did it again on yesterday. He backed down from the tariffs, right? We will talk about that, I imagine.
Yeah.
You see the sell-off wasn't as, especially yesterday, when he noted that he was going to impose those tariffs, the sell-off in risk wasn't as aggressive as you would normally see. I think that's the market's readying itself for a dip buying scenario because they expect him to back or pull back from those threats, which he did. Now, in terms of 2025, I mean, the Fed was interesting. I mean, there's a lot going on with the Fed. You got the new Fed chair coming in this year. There was Trump attacking the Fed. I mean, we all know how Trump feels about Fed Chair Powell.
Yeah, we certainly
there's
do.
Also there's also the 3 consecutive cuts at the tail end of last year for the Fed, and they're now in a wait and see approach going forward. There's just so much that happened. I mean, the AI boom. The AI bubble fears, elevated valuations. Like your report said, despite the volatility, the investor positioning has remained, is heavily skewed towards equities right now. And I think your report noted that. I really enjoyed your report, by the way. That was, and as I said before, I wholeheartedly agreed with what you wrote. I mean, it was the cash allocations. It's insane what's happening. Normally when the markets become volatile, when investors get nervous, they actually sell stocks. And move to a cash, a defensive position. But in Q4 of 2025, Q4 last year, the opposite happened. Investors, they kept their money fully invested in stocks, even as markets, even as we were dealing with elevated volatility. Every sell-off was met almost not immediately, but every sell-off was met with dip buying rather than panic selling. Especially with the AI, we're all aware when AI hits the news or not disappointing news, but AI gets thrown into the, when we're met with something that's negative for AI, you see a sell-off, but it is quickly bought into. I mean, a record low cash suggests that investors either believed there was no better alternative to stocks, or that they were too complacent about the risks. Sell-offs, they were short-lived, again, characterized by dip buying. And rather than, I think you noted that in your report, rather than sustained de-risking.
Yeah.
And you also noted in your report, which I agree with, the traditional relationship between equity stress and the dollar strength really broke down. They often weaken together.
Yeah.
So just on that, Aaron, you were talking about how, in April you found a huge dip in equities with the announcement of those tariffs. But now we're starting to see, as you noted, that, people are they're buying no matter what. And we see this on this equities chart right here. Do you believe this is a change in regime? I mean, we're still having these shocks, but nobody seems to, as you noted, be responding to them as they did, in April last year. So do you think this has moved from a market shock to longer term consequences now? What is your view on this shift?
Look, I think the stock market is going to continue to appreciate. I don't think there's much that's going to stop this train right now.
Okay.
Do I believe AI is going to transform the world? Look, I've asked this question. I've been asked this question, and I've asked this question to so many different analysts, and no one really knows. That's the truth. No one really knows. And I was going to ask you guys what your opinion is of this, because I really don't know what this will hold. I do get the feeling that we are in a bubble, but analysts' opinions regarding this are so mixed. There's some that's adamant it's going to the moon, and AI is going to change everything. There's some that's not. Some that's I really don't know, to be honest. But I do believe. Look, I'm still a dip buyer in equities. I still believe that we are going higher based on AI. I do believe it is transformational. We all use it, right? We all use it. It helps us in our daily lives now. Whether it's gonna have, whether it justifies the capital expenditures that are going forward, are coming into place right now, I don't know, because they're not generating enough. They're not generating revenue to justify those. That's the key issue, and that's, I think, the key question for many investors right now, especially equity investors.
Yeah, no, I agree with that 100%. And I mean, as you know, I am of the view that this is a bubble. But as you pointed out, I mean, what is it going to take? I mean, look at
exactly
this,
what,
to bring it to bring this to its knees. And I mean, but that's also, I mean, just the fact that I'm asking that question is a bit dangerous. Right? It's not a healthy question to be asking about a stock market.
I do believe we are in for some more shocks.
Yeah,
I do believe that, and I believe they will be quite heavy sell-offs. But again, like we said just a minute ago, and you noted in your report, they're all met with dip buying.
Yeah,
and I think that's the regime going forward right now. That's the thing going forward: dip buy. And if investors are going to keep buying into this,
you got to go long for the ride.
Yeah,
it's very, very hard to go against this right now. I'm primarily based. I'm primarily an FX trader, so I don't really follow equities so much. I know everything's correlated and it has, effects on different markets and things, but I just don't see anything stopping this freight train as of now. But as I said, there will be shocks. I know that. Will be shocks. I believe that.
And there's too much capital investment there. People are not going to let it easily.
I just can't understand how they can justify billions of investment right now, and I don't know what the outcome will be. I mean, I'm not sure if this was AI itself, but Elon Musk was saying you don't need to save for retirement now. Doctors don't need to go to medical school now because AI will take over that. But I mean, I don't really know how to react to that. What's the point of anything then?
Yeah,
it just makes no sense. And this is Elon Musk. It's quite dangerous in my opinion, that was quite dangerous for him to say that, because people will listen to him.
Yeah.
People will believe that. And I'm certainly not going to say he's wrong, but to say that you should stop saving for retirement or stop going to medical school because AI is going to take it. I don't know. Your guess is as good as mine.
Yeah, let's see. But you're right. I think that's irresponsible. But but let's bring it back to FX. I mean, as we touched on there, I mean, we moved into equities, but and I think the interesting thing there is what you pointed out, and as we mentioned in the report, is the the end of, well, not the end, but the weakening of the correlation between US equities and the US dollar, and we can see here, this is Q4, this is a DXY index. I mean, the DXY got pummeled pretty hard in Q4.
Yeah.
And as we mentioned in there, I mean, there's a lot that's to do with obviously the government shutdown and internal divisions and the Fed under political pressure, obviously rate cuts and cutting rates in the dark. And it's, for me, a lot of the weakness in the dollar is not necessarily about the rate policy, it's about the uncertainty around the rate policy. There's the divisions in the Fed that we have now, and obviously with Jay Powell coming to the end of his term, and we'll talk about Q1 and who's going to take over, who's going to be the chairman. And I think a very good question, I might actually skip ahead and ask you this now, is do you see an end to these divisions at the end of Jay Powell's term, or are we just seeing the beginning of a divided Fed?
That's a good question. So as you said, we do have a new Fed chair joining in the middle of next year, but although look, we know he's a he now, thanks to Trump's speech yesterday. I'm not sure if you look, he's going to be dovish. He will be dovish. But look, as we all know, the FOMC is a voting system of 12 members.
Exactly.
Not just one. Decisions are made by a majority vote. In terms of whether the Fed will remain divided, I believe so. I mean, look, we've got Fed governor, the newly appointed Fed governor, Stephen Miran, voting for a bulky 50 basis point cut. On the other side of that, we have two Fed governors, Goolsbee and Schmidt, voting to hold things unchanged. Then we had the remainder voting for a 25 basis point cut. As I noted, we had 3 cuts at the tail end of last year. Your guess is as good as mine who the next Fed chair will be. Trump knows, according to his speech yesterday, but didn't let on, other than that it will be a he. Whether they will remain divided, I believe they will. Yes, I believe, unless we see the inflation data subside considerably and the labour market subside as well. I believe it will have division going forward. Yeah.
And I think that leads on quite neatly to kind of an outlook for the US dollar, because I mean, inflation is still well over target in the United States. What is it, 2.6, somewhere around there?
The headline is 2.7 for the CPI. It's around 2.7, 2.6 for the core.
And so, I mean, cutting rates when inflation is that high, far over target, I mean, traditionally in the past, before 2025, we would have said that's insane.
I agree.
And surely if we get a more dovish Fed that is more willing to do Trump's bidding, we can only see a weakening of the US dollar here. We can only see, higher inflation and a weaker USD as a result.
Look, the US economy enters this year with growth intact. I mean, with the economy, I think it's near trend of around 2%. It's doing pretty well, but inflation is above target, as you said, and it keeps the Fed in a really difficult position. It's not a recession backdrop, I feel, but an untidy one, as political pressure does test a data-led policy for this quarter at least, and this year. Look, I see a number of headwinds for the US dollar. I agree. First and foremost, of course, is the Fed easing, right? I know the Fed projects only 1 rate cut this year, according to its latest SEP. Summary of economic projections, but the markets are pricing in 2. I've read a number of investment research reports now that are projecting more than that. Some are 3, some are 4. And look, I think the overall consensus I got from the major investment houses was that it's largely dependent on how the jobs data holds up. It seems like the Fed is almost comfortable with inflation being at, at the upper range, nearing 3% rather than nearing 2%. As we said, the December inflation is at 2.7%. I'm not sure what the November inflation data is. That's just landed now, so I'm not sure what that is.
But literally, I think as we went live, it probably came out.
Yeah, it is. Yeah, look, inflation expectations are around 2.5% for the next 5 years. Break-even inflation is around, I think it's 2.4%. I think it's all about the jobs market. I mean, if you look back to the December jobs report, it was essentially the first clean read we had since the shutdown. But it was a mixed reading. We had unemployment eased back to, I think, 4.4%. But the negative revisions in the payrolls print revealed that fewer jobs were created than previously believed. And also, you have to take into account that the Fed Chair Powell's estimate of 60,000 over the report of NFPs. So the US economy is actually shedding jobs right now. And look, it would be very unusual to see improvement with the monetary stance still being restrictive. So, but look, they're in a very difficult position. You've got inflation above target, as you said, and jobs market weakening. It's not a pleasant place for any Fed. Sorry.
Yeah, and how do you expect, the Forex market to respond to that, to the easing?
So for me, primarily, as I said, I'm an event-based trader. How I'm approaching this is I don't trade into any events. I trade based on out of risk events. With my current view is that the dollar will depreciate this year. I do have a couple of triggers that could see a recovery in the dollar. I will speak about them in a minute, in a second. But I would be a dollar seller on bad jobs or inflation prints that come in lower than expected. Though I would also consider dollar longs, short-term dollar longs, based on if the data comes in much stronger than expected. When I say much stronger, I'm talking, the maximum estimates of the analysts that are polled, and you can only really get that data from Reuters or Bloomberg, I think. But that's how I'm really approaching this. Look, the triggers, I think, is quite interesting. So we have three main tensions. In my opinion, we have three main tensions going on with the US right now. We have stubborn inflation. Just mentioned that we are down from that peak, but the last stretch is really proving sticky. The Fed's dilemma, as I said, they're in wait and see mode. A rate cut in March would, in my opinion, it needs two things. For a rate cut early this year, continued inflation decline, like disinflation, and persistent labour market softening. Right now, I believe they can firmly afford to wait. Hence why you're seeing market pricing for the upcoming meeting at, I think it's around 2 basis points of easing. So they're pretty much pricing in a no change decision. And then we have political pressure, as we've discussed already. This really is the wild card, in my opinion. Powell has hinted that the subpoenas related to the Fed headquarters, I'm sure you're aware of that, renovations there, let's come back, are part of the, he believes, I think, that it's part of a broader pressure campaign. Look, even if policy does stay data-driven, the perception of political interference, it really makes markets uncertain, and the markets don't like uncertainty. Now, what could ignite a recovery in the US dollar? So an inflation data surprise to the upside, holding the Fed back from easing. The Fed signaling a pause, or global risk appetite deteriorating, which should ignite safe haven demand for the US dollar. So that's how I'm really looking at the US dollar right now.
Yeah, no, it's thank you for the breakdown. I mean, you did say should there at the end, which is...
Yeah, well, I'm not sure, because they're correlated right now. So that's where I let that right to the last. I'm not sure, but it should.
Yeah,
I did say could at first, but I changed it to should. So
yeah.
it should ignite
They should.
demand
It
for the
should.
dollar.
And then I think
Yeah.
this is going back to, you know, what Alison was talking about, changing the regime here, you know, like we're going through a paradigm shift, it feels like. And I wonder if how a lot of traders are responding to that. But I do want to touch briefly before we move into more detail on what we think is going to happen in Q1. On a couple of things, I want to touch obviously on gold, which is the big story that you can't really ignore, and it continues to be into 2026. I mean, there's not really much to say here that we haven't already said, but that markets are uncertain. People are spooked, and they're pouring money into gold. Do you agree with that assessment broadly?
Of course, yeah. I mean, there's a number of factors driving gold right now. We have declining real yields, elevated government spending, and persistent policy uncertainty. So, and central bank buying, right? Everything's, I mean, I'd be interested to hear what you think of gold as well, because gold is just on a tear, as is silver. I mean, the performance last year was outstanding. Who would have expected that? It's just insane. There's just so much going for gold right now. I'd be interested to know what you think. But ultimately, declining real yields and persistent policy uncertainty is going to, and the geopolitical tensions, of course. I mean, you saw gold and silver pop higher on the back of those comments from Trump regarding tariffs. Again, it's underpinning precious metals, that safe haven bid.
Yeah, it is the haven bid, and I think, I mean, probably also because the USD is less of a haven, I think attracting even more capital than it usually would. And that's really providing a boost. But I think what you pointed out, you mentioned in there, I think a really important thing is the central bank buying, and that's really underpinning, providing a foundation, providing a support that, I mean, that really makes it difficult for it to pull back too far. And I don't see any end to this as long as we have this uncertainty. I mean, it's got to stop somewhere, but I don't see it. But I don't see it stopping anytime soon.
Have you seen the forecasts of the major investment houses? They range from around 5,000. I think we're nearly at 5,000 now.
Exactly.
Yeah, Alison, you were talking about this before we went live.
Yeah, Goldman Sachs said 5,000. I was like,
that's what I was reading. I was reading that as well. 5,000. Yeah, I was. I mean, I'm certainly positive gold and silver right now. I'm not invested in any, unfortunately. But it's insane times. We have equities at record highs. We have gold at record highs. We have silver at record highs. But Bitcoin's been an interesting one.
And that's another one I wanted to touch on briefly. Yeah, exactly, because
cryptos.
Yeah, this is crypto in Q4. I mean, this is Bitcoin in Q4, but I mean, it could be any of the major cryptocurrencies.
Yeah, I did. I'm not a big crypto fan, to be honest. I don't really know much about them other than looking at the technicals of the charts and things. But it's been reacting more like, I think you noted that in your report as well. It's quite. Do tell me if I'm wrong, but I think you compared it more to a tech stock. Or a high beta stock.
Yeah, exactly. High beta. Yeah,
the moves have been insane.
Yeah, it's quite unusual because, and it shows really the difference between stocks, how investors are treating stocks and how they're treating Bitcoin, in terms of risk. They're completely. Everybody's like, don't really want to touch crypto with a barge pole at the moment. But what's interesting about it, though, is the amount of institutional capital. And it was the big story, I think, coming into 2025, you know, when Trump took over. You remember all the crypto bros at the end of 2024? And there's all this jubilation, this euphoria almost, this outburst. And we've just seen first disappointment that Trump...
Yeah, that was a big disappointment, wasn't it, at the beginning of the year for cryptos, because they thought it was going to be the... I can't remember, crypto capital of the world, wasn't it?
Yeah, and there was talk about having a crypto wealth fund, you know, and you know, Trump launched his own coin, which I saw has lost 94%. It's lost 94% of its value now.
Is it really? Oh, I didn't follow it. Oh, really? I didn't know that. It's lost 94%.
94% of its value. But Bitcoin's a granddaddy, and then this really gives you a good sense of how investors are treating Bitcoin. I mean, do you have? I mean, apart from, I mean, I don't think there's much more to say here. I mean, unless you've got something to add, Alison.
I mean, look, I just want
Sorry,
to yeah, I just want to really reiterate what you said. I think you referred to it as a high beta risk instrument.
Yeah,
and
exactly.
it really opened my eyes there, because what that means is, for anyone that's doesn't understand what that refers to, is it moves more dramatically than the overall market. So when risk assets fall, crypto falls harder. When they rise, crypto rises harder.
Mhm.
It's, as I said, it's behaving more like a leveraged tech stock, which I wholeheartedly agree.
Mhm.
And it's kind of ironic, because even when conditions that should have helped crypto occurred, so the expectations of lower rates, liquidity injections from central banks, Bitcoin still fell.
Yeah, exactly.
And this really suggests that the markets now treat crypto as just another risky investment.
Yeah.
That investors dump when they get nervous, not as the digital gold or the protection against inflation or monetary chaos. I mean, correct me if I'm wrong, but that's what I understood from your report, and really opened my eyes to what's going on in crypto.
But also earlier, last year, there was also that huge dumping of crypto after Trump's announcements. I can't remember how many millions. Chris, do you remember? I mean,
some of the whales. I mean, you're talking about the potential for insider trading. I mean, it's not technically insider trading because it's crypto, but yes, a lot of strange moves around Trump's tariffs announcement.
And I feel that's probably affected people's confidence. Just seeing how quickly it moved with one announcement. Maybe they've just decided, as you say, Aaron, just far too risky.
Yeah, and especially in a high risk environment at the moment, where everybody's a bit nervous, it's not really worth it. I think that's probably worth it.
I mean, did you see yesterday? I did have a quick look. I did get the charts up and have a look at that, but I haven't checked it today, but Bitcoin actually recovered. I think he recovered. I'm just getting the chart up now. Oh, it did have. It's down today. Bitcoin did recover yesterday as well, along with equities. Bitcoin's down across the board today. So last time I checked, equities were up, and equities are up. So it's a very partly up. They get higher, but it's a strange environment.
Yeah, S&P 500 is up 0.5% at the moment. Which is I mean, but I think this is kind of a relief rally more than anything, right?
Yes, I agree.
Which we'll get into in a minute. Before we jump into some predictions and looking ahead for the year, I do want to talk about the yen and Japan, because this has kind of been rumbling on in its own little bubble on the other side of the world, as it often does.
Yeah, it's been a combination, though, hasn't it? Especially for the last couple of weeks, it's been a combination of Trump and Japan, and that's why I said at the beginning of when we had a chat before we went live. It's been a wild couple of weeks. It really has, in terms of markets and what's going on.
But yeah, so Japan's quite an interesting one, because there was quite a lot of, I mean, once again, a lot of political changes that have a real effect here. There was the snap, there was the elections, and then the new prime minister has got quite a different view on fiscal policy than a predecessor. And she has, and this obviously feeds back into pressure on the Bank of Japan, who are well known as being interventionist anyway, and very concerned about the price of the yen. So why don't we start here, actually, since we're looking at it, and we can try and make some thoughts, because I mean, it's probably one of the easier ones to make some kind of prognosis about going forward. We've got the snap elections that were called, I think, February the 8th. I think the BOJ are meeting now. I mean, it looks like they're going to hold rates steady. But there's still the risk for, I mean, and I think probably a very clear present risk. I mean, correct me if you think I'm wrong, of continued rise of interest rates in Japan.
Yeah, I do believe that they will increase interest rates, but where's the terminal rate? I couldn't tell you. And a number of analysts have said the same thing. It's very difficult to predict. I find that the Bank of Japan is a very difficult one, a very difficult beast to understand. I mean, look, right now for the yen, you saw with the JGB yields, right? They've pulled back now. That was quite insane, especially for the 40-year Japanese government yields. That really did send some, it all rippled through to the US markets as well. Anyway, look, the big picture, everyone is really betting against the yen, I feel. People thought that 2025 would be a good year for the yen, the Japanese currency would get stronger. The opposite happened. The yen has been getting weaker and weaker. It started really dropping following, if you look at the chart, the dollar yen chart, if you zoom out, you'll see that the yen really started dropping following April, when Trump imposed those tariffs, which made investors feel optimistic and take more risks, I guess. But why the yen keeps falling? Look, when investors feel confident, risk on, they feel safe. They sell safe currencies like the yen and they buy riskier instruments elsewhere. But look, right now we have that situation, especially in the last couple of weeks. Japan is, put it simply, Japan is starting to complain that verbal intervention. Japan's finance minister is basically saying our currency is getting too weak. Look at the yen. Look at the yen against the dollar, for instance. She's also hinting, verbal intervention again. She's hinting that Japan and the US might work together to stop this, which is again verbal intervention meant to scare currency traders into backing off. That's not happening. The dollar yen is. Look, traders don't care yet. The problem, what I've found in my experience, is markets really ignore these warnings until governments actually do something. If you look back at what happened in 2024 with traders kept pushing the yen down. I think it went past 155 versus the dollar. Japan finally intervened around 160, the high, and the currency jumped like 400 pips. It's a big move. Everything went back to normal, and the yen kept falling anyway. Right now, traders are. Sorry,
I was saying the intervention didn't work.
Clearly not. No, and traders are now testing those limits again, and they're pushing towards. I've not checked just since earlier this morning, but last time I checked, they were pushing towards that 159 level, almost like they're daring Japan to intervene again. Look, the risk for us as traders, I would not like to be a dollar yen long here. Fighting against central banks is inherently dangerous. They, as we've already said, 400 pips. They can cause sudden, sharp, price swings that hurt traders. But look, the bottom line is traders are gambling that Japan won't actually intervene. I do believe they will, but probably not at current levels. Or that if they do, it won't matter in the long run, as you just said there, Alison. It didn't really matter, did it? It's back at current levels. So yeah, that's where I am with the dollar yen right now. I wouldn't like to be long the dollar yen right now. I'm just going to check where the chart is actually.
And the Prime Minister is also threatening to spend more money. I think they're really over 200%.
Yeah, I mean,
and that's why that's why yields primarily rose, right, to historic levels, especially at longer dated yields. Yeah, because investors are naturally, are worried.
Yeah.
How she's going to fund those I think it's the tax cuts, right? That's really the issue.
Yeah, no, she's scrapping the tax on the income, the sales tax on food. I think an 8%.
8% or something. I think it was.
Yes, exactly, 8%, which is that's I think I broadly agree with you. I mean, I think the Bank of Japan will intervene, but I don't think it'll intervene at this rates. But I think traders are pushing. They do seem. It seems like. The traders who speculate, who trade the USD JPY and other JPY crosses, do seem to have a serious animal instinct for trying to get the BOJ as riled up as possible. I mean, you're right. I wouldn't want to be the one doing it, but people obviously making a lot of money off of it.
right now, I'm looking at my charts right now. If you look at the daily time frame, there's a clear resistance around 158.49. I look that's a yearly resistance. So if you go to your yearly chart and you extend yearly opening prices, I find them excellent support and resistance, and that's currently being tested right now. And if we engulf 158.49, I'm then looking as far north, technically speaking, as 160.75. That's a 3-month resistance, so a 3-month opening level, all the way back as far as 2024. So if we get up to 160.75-ish, then I will be looking at I would think the BOJ the verbal intervention would certainly kick up. I believe a notch, and I think we will see something around that level, 160, 162. But I've heard some analysts say 165, as high as 165. So, and that's around there's resistance at 163.13. I'm looking at. That's a 6-month resistance level. So it could well be.
Yeah, no, it's definitely one to watch. An interesting space. But I want to bring it back. I mean, we're going to have to wrap this up soon. But before we do, I do want to talk about the last couple of weeks in particular, and maybe make some. I think it's very hard to make predictions based on the last couple of weeks and what we're seeing, just because everything's so chaotic at the moment. But I do like, this is a note that you released this morning, Aaron, that tacos are back on the menu. Which in light of the Greenland climb down, and we're not just. I mean, we've touched on a lot of different things here over the course of this. The institutional weakness that we're seeing in the United States, the political shifts, Trump flip-flopping as he's done yet again, and and I think this time, what felt different about this time, and from just a purely political standpoint, was the resistance that European leaders had to this idea of Greenland. That Trump had clearly crossed a line this time. And I think markets felt that. And I think that's where you saw this kind of huge freak out moment for about 2 days. Everybody pulled their money out and everybody was just sitting there watching. Nobody wanted to do anything until they could see.
It was all about Trump's speech, wasn't it? Everyone was waiting for that. Yeah.
And I mean, can we learn anything from this going forward as Forex traders? I mean, is this in any way useful to us, apart from, oh wow, that's really messed up?
It just reaffirms the point that I believe traders, the longer this goes on, Trump, flip-flopping, that's a good word, flip-flopping, Trump's flip-flopping attitude to things, and I just don't think traders will be taking him seriously. I genuinely didn't think he'd back down that quick. I thought, given the way he was speaking to reporters and stuff like that, I think there was one he was saying, you will see what I'll do. It was like almost a threat. But he really pulled back. But look, ultimately, I think I noted this in my post this morning. I don't believe it's over. Yes, he has pulled back on the EU tariffs, and that hinges on that framework of a future deal. It really does hinge on that, and I don't believe it will. Trump still wants Greenland. He doesn't. He's not. He's not going to back down from that. And the Europeans don't want to give Greenland up. So, as I said, look, I'm quoting from my article there. I feel it's far from resolved, and the next few days could be the next few weeks could prove very interesting. But I think I noted in one of my other posts that if Trump did invade, he said he wouldn't, but this would really, increase. I don't even.
I think you're talking about triggers for a full market meltdown. I think that would probably be
down
that would probably be it.
Yeah, it would be a full market meltdown then. But I just sorry.
No, I was just going to say, so, I mean, what this alludes to basically is trust, I think. So if trust is now sort of the dominant driver in the FX markets, what do you think then traders should be focusing on in 2026? It's a difficult question, but...
Wow. Or I can only really say what I'll be focusing on, and you can't not focus on Trump. You have to include him in your analysis, I believe. How? I don't know. You just have to have his
type risk.
Yeah. You have to have that in the background. But for me, primarily, I'm a macro tech trader, so I'll stick to what I know and when it makes sense to trade. So, as I said, if it's all based on inflation and the data. That's a really good question. I don't know, to be honest. I can only trade how I know, and that is through solid macro backdrop, central banks, economic data, and then a technical trigger. It hasn't failed me since, hasn't failed me. So that's something I will be sticking with.
Yeah. I guess the fundamental traders are in a very difficult spot, I think, just because it's
positional ones. Yeah.
I think it's now the shutdown is in the rearview mirror. I think it's becoming a lot easier. I mean, you only have to look at we had Australian data out, the Australian jobs data. That was a nice trade. Aussie employment come in stronger than expected, and if you look at the Aussie dollar against those G10 peers, it was a nice trade. I know a couple of good traders that were long that. So there are still opportunities out there, as long as you stick to your trading plan and you're aware of the risks. And you should always backtest your strategies and stuff like that. So I'm not going to go into that, but you should, trade what gives you an edge. I really, as I said, I admire anyone that can trade based on Trump's geopolitical tensions and things like that, and the geopolitics. I just can't make that work. So I really don't know in that sense.
Okay. Yeah, it's a good answer.
Well, I think that's probably a good place to wrap this up. Thanks again so much for coming on, Aaron. It's been really interesting talking to you and getting your feedback on the report, but also
Thank you very much for having me.
Yeah, and on Q4 and your thoughts on what's going ahead. And I think as you say, you can only trade what you know, and there are opportunities out there, and I agree with you. I think around there is still predictability in the market, not predictability, but events that your edge will carry you through. And I think it's about, and something you said, Alison, it's about knowing when to stay out. And
that's a good trade in and of itself, right? So I totally agree.
Yeah, and I think that's really what's going to be the difference for a lot of traders this year, is knowing when to stay clear of the markets, or not even knowing when to stay clear, just saying, okay, Trump's back on his Truth Social again. I'm going to stay out for the next couple of days.
It's a daily thing, though. That's a daily thing. How do you navigate that?
It is a daily thing.
Tell me.
Yeah, okay, thank you so much, Aaron. We'll have you on again soon, I'm sure. And
yes, Aaron, I think we've got a lot more to discuss.
Yeah.
I think we could have been on here for about 2 hours. So
Thank you very much for having me.
Thank you so much. And we can find you at FP Markets. It looks you write daily for FP Markets, I think, right?
Yes.
Yeah, super. Thanks so much again. And
thank you.